Stained and perhaps ruined more than 100 years of trust in Mother Met. We call this change a policy of deceit. The state of Florida called Metropolitan Life sales tactics misleading. In Pennsylvania, the governor called it deceptive. And here in California, Irwin and Barbara Siegel call it devastating.
What's this?
In July 1992, two MetLife agents stopped by the Siegels' home in Atwater. According to Irwin, the agents convinced them to roll over almost $21,000 into a universal life policy. Irwin says the $21,000 represented 30 years of hard-earned savings in 3 old MetLife policies. The way they explained it to you, what was the benefit? How would you benefit by doing that?
I'd get better coverage for less money, less premiums per month, and I'd have better coverage.
67-year-old Irwin says the agents told him if he bought a universal life policy, he would have insurance till he was 95. But the policy, since the day it was delivered, says if all premiums are paid, it will end in October 1998. 6 years after being written. There's only one way you can collect on this.
That's correct. Die before 1998.
You don't plan on it?
I hope not. I haven't planned on it.
Siegel also says he wouldn't spend $21,000 for only 6 years of coverage. Now, why would a MetLife agent sell a policy like this?
This is not ABC stuff.
This man would know. John Steele was a MetLife agent for 6 years. In 1992, he sold Irwin Siegel a $100,000 universal life policy. When you sat down, what did you say to him? What was it that you told him? This is why you should take those old policies and roll them over into this universal life. I mean, what was the one thing you sold it to him on? What was the most attractive part to that?
You know, see, without spending a little bit more time on that, CJ, I just couldn't give you an exact answer on that.
Insurance investigator Mark Colbert says he's investigating almost 270 policies written by John Steele. Policies, Colbert says, that cheat MetLife clients out of their insurance savings. Colbert knows what he's talking about. He and Steele worked together as MetLife agents for 3 years.
Money. The motivation's money. Absolutely. You know, some people like driving around in the Mercedes-Benz and living in a $400,000 house and you know, all the stuff associated with you know, the glamour of it. Bottom line, CJ, it's still the money.
With the insurance?
Colbert says the Siegels could represent as many as tens of thousands of MetLife policyholders between Reading and Visalia. They could be victims just like thousands of other MetLife policyholders in Florida and Pennsylvania. Longtime clients who were trampled in Metropolitan Life's drive for profits.
These people are on a hype. As long as they can make that kind of money, they're really oblivious to the chances that they're taking.
Colbert says MetLife would identify its longtime loyal policyholders with large cash reserves in old whole life policies and give those names to the agents. The agent would persuade the policyholder to give up that money and buy a more expensive universal life policy, claiming, according to authorities, they were getting free insurance for the rest of their lives. For example, an old policy might cost $120 a year. The new premium is $650 annually. The additional $530 comes from the policyholder's life insurance savings. Eventually, no money is left, and MetLife cancels the new policy. Colbert says this trick is so widespread, the insurance industry gave it a name: churning.
It's a no-win situation. John Steele wins, the client doesn't.
As if it was what we call an in-house role.
We asked 32-year insurance veteran and vice president of the Fresno Life Underwriters Association, Dan Mueller, to watch Steele describe his sales technique on tape.
There's little portions of truth in the things that he says.
An hour later, Mueller had seen enough.
I mean, this guy is, well, I hate to say this, but he's doing exactly what many people have pictured life insurance people to be, and that is, he never shuts up, and every chance he can is going to get you thinking about your loved ones and what a sense of responsibility you have to them.
It's a big shock. You don't picture Metropolitan pulling stunts like that, or even allowing their agents to get away with things like that.
We contacted MetLife officials in New York hoping they would comment on the allegations made by their policyholders. So far, they haven't responded. But John Steele was more than willing to talk. He told us he's done nothing wrong.
I would think that people would, if they could get insurance to 85 or 90, perhaps that would be satisfactory to them. But, you know, perhaps some of them would want age 95, and if they were under that impression, I'm really sorry about that. I don't know what to say.
MetLife officials in New York did respond this afternoon with a fax, and it reads, quote, "The welfare of our policyholders remains the highest priority for MetLife. As always, we stand ready to address any problems that individual policyholders may have." Tomorrow we will talk about why agents churn policies, and more upset MetLife policyholders come forward who say they are losing thousands of dollars to a policy of deceit.
I was getting frustrated because when I received my last annual statement, it said that the policy would run out in '99 if I didn't make any further payments. Well, after I have something for 30 years and it's going to be gone now in a few years, it didn't sound right to me.
Okay, now if you have any questions and you want to find your policies here, very important. You got to find the policies, find them in the drawer, wherever it happens to be, and write to us if you have a question. 47 On Your Side, P.O. Box 5455, Fresno, California, 93755. You can also call us, 222-2411, and I don't know how many phone calls we get on this one.
Wow.
You may want to write to us, but definitely check tomorrow night. And find that policy. So important.
You know, regardless of the company, because people can learn from this regardless, right?
Yeah, definitely.
Okay.
Okay. In other news tonight, a life...
Hello, and thanks a lot for joining us tonight. Tens of thousands of longtime Metropolitan Life policyholders have been the targets of deception in several eastern and midwestern states. Metropolitan Life has been hit with millions of dollars in fines by Florida, Pennsylvania, and Texas, with investigations currently underway in New Jersey and Ohio.
Tonight, 47 On Your Side continues its exclusive investigative report, Policy of Deceit. Thousands of MetLife policyholders in Central California may find that the nation's largest insurer took thousands of dollars of their insurance savings. CJ, Metropolitan has been such a trusted name for so long. How could something like this happen?
Well, you've heard the old cliche, follow the cash. Well, guess where the trail leads? Yeah. Because the bottom line is money, MetLife officials made a decision in the early 90s that profits, not clients, were what mattered. And according to authorities using a sales technique called churning, MetLife sent its agents out to grab millions of dollars of their longtime policyholders' life insurance savings.
A state record $1.5 million for their actions. So where did MetLife agents and executives go? Well, they went to Puerto Rico at your expense.
As late as last week, local news in Pittsburgh, Pennsylvania was reporting abuses by MetLife and its agents. The Pennsylvania insurance regulator says some 40,000 Metropolitan policyholders were systematically misled and deceived by MetLife.
I'm on a mission to raise my commission.
The Philadelphia Inquirer says state officials found that 90% of all people who bought additional or replacement insurance from MetLife from 1990 through 1993 were subject to misleading sales practices.
He was very interested in selling us these new policies.
Andrew and Elizabeth Smith of Los Banos have been loyal MetLife policyholders for 30 years. They say a Metropolitan Life agent convinced them to cash in $12,000 in 2 old whole life policies and buy 2 universal or flexible premium MetLife policies.
And he sold it as paid up, fully paid up life insurance, no additional payments required.
Coming in with a dog.
According to the Smiths, the agent told them both policies will last until they died. But Andrew says he recently discovered his policy will run out in 4 years when he's 72 years old, and Elizabeth's will end in 12 years when she's 78. And now Andrew says MetLife is telling him he has to pay more money to keep his policy.
$3,100 and some dollars in my case annually. And this is just a direct conflict with what Mr. Steele said to us, that there were no payments required forever on these policies.
I was very, very surprised. You know, I thought that just can't be. A company like that doesn't do that. They do it.
The policy is so state-of-the-art
Former MetLife agent John Steele, who sold the Smiths their policies, says he was one of Met's top producing salesmen. He says falling interest rates over the last couple years has decreased the value of MetLife's flexible universal life policies.
That's what the issue is on some of these policies, is that people you can't base the future on current. Everything we're talking about today could potentially change tomorrow.
But according to Dan Mueller, vice president of the Fresno Life Underwriters Association, interest rates have gone up the last few years. Steele also says no MetLife policyholders should be surprised if their policy is running out. All they have to do is read the year-end summary from Metropolitan.
You would get basically a big, bright letter letting you know when the wheels were going to fall off. And you would, plus they would give you 30 days after the policy collapsed to put it back in force. And
what would it take to put it back in force?
It would just vary on your age, the policy that you had.
But you'd have to start it over again with probably more cash.
No.
Or some kind of equity of some sort.
Well, you'd have to start paying on it again, yeah. Or
would it have any cash value?
No, not usually.
So
no.
the policy would be wiped out.
The policy would be wiped out.
The annual reports and the policies say one thing, which is completely different than what the agent said. Yeah, you could call it swindled.
Insurance investigator Mark Colbert worked as a MetLife agent for 3.5 years. He says John Steele made a $3,500 commission by churning Irwin and Barbara Siegel's policy. The Siegels say Steele rolled over $23,000 of their money into a new MetLife Universal policy, a policy that will run out in only 3 years. Irwin says Steele told him it would last until he died.
Well, I think they ought to pay for the upset I've had, and I think it ought to be corrected.
I don't feel they have the right to go around telling people these lies, especially when we believe them. So gullible we are.
The Siegels may have been gullible, but they're not alone. According to a former top salesman for Met, Rebel Freitas, 60% of the policies are bad. But agents don't know better because that's how they're taught. And if you're a loyal MetLife policyholder, why wouldn't you trust Metropolitan Life? The Siegels did, and others did, until a telephone call shattered their blind faith in Mother Met.
I was on the impression that it covered me until I died.
Sir, do you plan on dying before February of '99?
I hadn't planned on it.
Okay, sir. That's what I'd like to talk to you about, John.
Mr. Graves. Yes.
Mark Colbert. How are you, sir?
Graves says John Steele told him he'd have life insurance till he died if he paid $250 every 6 months. But Metropolitan has been taking $408.50 every 6 months. Colbert says the difference is being taken from Graves' insurance savings, and eventually the Graves money will run out.
After that, your policy will end. You will have no cash value, you will have no premium payments, you will have nothing.
Shouldn't be laughing because I feel like I just got hung.
By selling enough policies like the Graves and the Siegels, an agent could end up on the MetLife $1 Million Roundtable. John Steele did. As a reward, Metropolitan sent Steele on expensive trips. But who taught John Steele how to sell this way? He says MetLife agents are required to go through a sales training program when they're hired. We asked Steele who trained him.
The manager, the branch manager, would provide instruction in the branch.
Any idea who was that at the time when you?
Dave Mortera.
Is there a chance we can talk to you right now?
No, I'm busy. I have to leave. I got an appointment to go on.
There's no way we can talk to you about some of the policies that were written?
We wanted to talk with Dave Mortera, who was Steele's branch manager at the Modesto MetLife office. We wondered why he would teach John Steele to sell this way.
You didn't teach him how to sell insurance? You want to talk to us about it? You want to talk to us about this at all? Mr. Mortera, you're not going to talk to us at all about teaching Mr. Steele how to sell insurance? You have no problem with the way he sold those policies?
Regardless of where he was taught, John Steele learned all the tricks of the trade. He became a top salesman for MetLife, and he couldn't have earned the big dollars and the fancy trips without some help from MetLife. Steele knew that longtime MetLife clients could lose when he sold them these new, more expensive policies.
The person doing the buying's interest perhaps could be compromised in situations. You know, I couldn't pretend like this is a perfect world.
Now, last night we received a fax from Metropolitan